Apologies for the delay, sir. Let's begin. Acha, today I'm going to start with the area of principles of accounting, conventions, concepts, all those things in detail. That's a very important area to understand because normally in the examination, 1 marker, 0.5 marker, there are many questions which are asked exclusively from this particular area. So what we are talking now is quite important. So whatever class we are going to have today is an important area for your examination. So shall we begin, everyone? Please confirm. Okay, when we talk about now, the topic that we are going to take up today is called concepts of accounting. There are 2-3 ways of looking at it. So I'll be starting with the basic way and then I'll talk about the IIBF book itself. They have also talked about it in a different manner. So I'll be giving you the view that is taken in general and what has been given in the IIBF. Okay? Okay, let's talk about it, everyone. I'm sorry. When we talk about the area of concepts of accounting, pata hai, in accounting na, we have certain rules and regulations. There are certain things that we assume. Okay. Number one, for our class today, there are certain things which you would do. Okay, if you go to the office tomorrow, most of us are someone who prepares our office work or office dresses all set. That means today night itself, whatever we are going to wear tomorrow, whatever we are going to have tomorrow, the tiffins, the things that we are supposed to carry tomorrow is already set. And while going to sleep, we'll always assume I'll wake up tomorrow and go to the office tomorrow. Now the point is, these are assumptions. Sometimes we get unwell, sometimes we are having some issues at our place, sometimes there is a very joyous information that we get and then we are taking an off for that particular day. First, sometimes it's a festivity, anything can happen now. So in terms of concepts of accounting, there are certain things that we assume, right? In today's night, I'll assume that I'll wake up tomorrow and have a class tomorrow. You never know. Maybe I won't even wake up. But humans still tend to have this particular thing that, array, it's okay. I'll prepare everything. Now, I'll wake up tomorrow and do all those things. That means I'm assuming today that I'll be alive tomorrow. In the same case, business also assumes a few things. There are certain, see, not everything can be a variable. Can it be? That pata nahi the class would be there or not, pata nahi the internet would be working fine or not, maybe it's my internet or your internet, both the cases there, or any other sort, hai na? Nothing is known to us. If we take all these particular variables, nothing will work out for us, pata. We won't be able to start a class. We just say, Acha, everybody, let's meet at 8:30. Until unless there's a problem, then we start the class a little late. Otherwise, what happened? The class will start in the first 5 minutes only. Now, that is the point that we say that there are certain assumptions that we are keeping. Okay. The second point is basic principles. Humans always tend to have this point that what I'll do is I'll say that humans should be honest. They should be they should have integrity. They should work in a certain manner. When we try to glorify the lives of a human being, and we tend to give them certain values. That's our principle. In the same case, accountancy also did the same thing. There are certain values or principles which they created. Then the next point that came was conventions of accounting. Conventions means something which is going on in the market for quite a long time. Conventions can be stated as something where you can say conventions can be stated as jiska chalan ho, whatever is already going on in the market. For example, if we prepare anything related to this area, let me give you an example. In the Wholesale market. You must have heard the wholesalers normally sells goods to the retailer on credit basis. They don't sell it on cash basis. Why? Why do they do that, everyone? Why do wholesalers normally sell goods to retailers on a credit basis? That means they do not take the money right away. No idea? Why would a retailer get things on credit? Very good, Lakshmi ma'am. For rotation and to retain the customer. Now he wants to retain that particular retailer who's buying goods from them. He'll say, okay, you sell and then give me the money. Correct. Now this is a convention in terms of wholesale and retail market. This is what is going on in that particular market. That is why we can talk about it in that way. Kya re? This is the logic. है ना? This is what we call conventions. So overall, we have certain things which we call assumptions, certain things which we call principles, and certain things which we call conventions. Got the 3 points, everyone? I'll go into the details just after this. Please let me know. There's one more concept that I wanted to deal with you. So I think I'll be taking that concept tomorrow. Ashwin sir, which portion? What should I repeat, everyone? Please let me know if there's anything that I should repeat. Assumptions are those things which are stated that these are stabilized. We are not changing these things. We call them basic assumptions. Second, basic principles of accounting. When I say basic principles of accounting, what does it mean? Principles of accounting would mean certain things that we should inculcate in our businesses. And conventions is something that is there in the market itself. This is how the market actually works. Done? Chaliye. Now let's talk about the conventions, concepts in another point of view. In the IIBF book, they have given the concepts of accounting in the following manner. They say there are certain things that we need to take care while recording the things. When we are recording what is happening in the books of accounts, there are certain concepts where these are applicable, and then the entire thing changes into basic principles of accounting. Okay? In terms of the basic principles of accounting, they say that there are certain things that are. Acha nahi, just a moment. I think there is a little correction required. One is at the recording stage, and the second one is at the reporting stage. There's a little mistake. Let me just rectify it. One is recording, the second thing is at the reporting stage. Let's start with the first concept. The first concept is cost concept. What do you mean by cost concept, everyone? What do you mean by the term cost concept? Heard about this concept? Or what do you think this would mean? Manufacturing cost, where money involves. Yeah, these 2 points are correct. Acha, let me give you an example. I bought a car last year. Okay, my car valued at maybe 12 lakh. And do you think whenever I drive my car, I look at my car today is of 12 lakhs. Then the next time I drove it somewhere, I said, no, no, now it is of 11 lakhs. Then someday I got it painted, or maybe I made it absolutely new. I got a few modifications. Then I said, "Arey, now my car is of 12 lakh 45,000, or maybe 12 lakh 50,000." Do we really do that, everyone? When do we value our cars or houses? On what specific day do we do that? बताइए. Sir, correct. When we use something, it depreciates. And that is correct even. But what I am asking is, in terms of the valuation of that car or the house that we live in, do we keep on valuing it? Very good, sir. This is what I was looking forward to. The answer there. Uh, the answer is when we sell our car. We value our cars, or we would value the house only on the day of selling it. I cannot have a breakfast and look at the ceiling and say, mama, now our house is worth rupees 12 lakh, now it is for 4 crores, now it is for 5 crores. They'll say we are not selling it, so you need to just eat there. That simply means in our normal day to day life, we do not value the goods every single day. I use certain equipments when we are taking the class, but I not value them every single day. That means the basic recording stage says whenever you buy the thing, record it only on that day. What I'll do is, the day I bought my car, okay, I'll say, Array, I bought my car for, say, I bought my car for 12 lakh. Now, I will not record it at the market value. I will always record it at the cost. Why would I record it at 12 lakh? Not market value. Say market value would increase. For example, Innova came for barely 7 lakhs. Right now, I think it has gone up to the amount of 35 lakhs. Think about such cars and all, their market value is increasing like anything. New models are gaining more and more popularity. The point is that what should I record at? What does the cost concept says? The cost concept says you should value your goods in the market, but please make sure you don't do it very often. Okay? The market valuation should not be done every now and then. What you need to do is you should record the books at their cost. You should record any asset at their cost. That's the rule. But the point, everyone, this is what we define as cost concept. Any doubts in the cost concept, everyone? Please confirm. If there is any doubt, then please let me know. Okay, sir. Sonali ma'am. Sir, Cost concept is something which says that whatever price you bought that particular thing, you record it at that value. You should not keep on revaluing it at the market price every now and then. All the monetary transactions should be recorded at historical cost, the cost at which you bought that particular thing. Now, in this case, if I bought a particular car, I will not revalue it every now and then. Once recorded, it's done. So at least my accountant is at peace. Otherwise, he would not have been spared even for a single day. If there are 365 days, he would have been ruined for those 365 days. Because every single day he would be revaluing the goods, which is of no use. Then every transaction is recorded with the present value and not any future value. The transactions are recorded at what the price is today, not something that we'll have some tomorrow. Unrealized gains are ignored. If there is nothing that we have currently, we will not record it today. And any item that has no cost is not taken into books. If anything is of nil value, why would you record it now? Got the point, everyone? Done? Is the cost concept absolutely clear now? VG sir? Michael sir, done? Okay. Now, shall we move on to the next one? Okay, the next point that arises here is money measurement concept. If I talk about money measurement concept, what would it say? I think this is what we have talked about in many of our classes. What would money measurement concept mean, everyone? In the first class, in the second class, I think technically we are meeting for the third day right now, and I've talked about it earlier as well. If you ask me, how's my business going on? I say good or I say bad. What does it mean? Is it of any use? Money measurement concept talks about only one thing, everyone. Record everything. Record everything when there is a money involvement. Rajiv sir couldn't get it. We will record the things only and only when it talks about money. Do not record anything which does not involve quantifying, which does not involve recording in terms of the money. How do we take it up? Ashad, then in this case, now, in terms of the main arguments which is there in the cost concept, it is relevance, whether the data should be relevant, objectivity. If I ask you that, sir, show me the books of accounts, and you say, ma'am, there it is. You show me the bills, you show me the vouchers and everything. It is a proof that things are happening. And then is feasibility. When I talk about feasibility, feasibility would be stated as something whether the data can be expressed or not. That is money measurement concept. Right? Got the point, everyone? Any doubts in the money measurement concept? After money measurement concept, the next is business entity concept. Acha, let me talk about the business entity concept as well, everyone. Um, I invested a certain amount in my business. Okay. Now the point is, do you remember? I think we talked about it. We talked about it, but let's talk about it in detail. When I put money into the business, I call it capital. I gave money to the business. I am Niharika. I gave money to the business. Business has got capital. Now, can I randomly take the money out of the business at any point of time? Is it okay if I do that, everyone? Correct, sir. Business sometimes need it. Security deposits are required. Payments are to be made to a certain area. How can the particular proprietor say, "Arey, this was my money. I'm taking it. I'm leaving it." You know? Acha, Rajiv sir, money measurement clearly says that record only those things which can be quantified in terms of money. For example, profit or loss. You can record it in terms of money. But can you record the loyalty of an employee in terms of money? Can say he's 10,000 loyal or 1 lakh loyal? Done. Now, business entity concept says that business is separate from the proprietor. In this case, what are we going to mean? Pata hai? If I invest money into the business, it's called capital. What if I take money out of my business? They say the particular proprietor is taking money out of business. This is called drawings. When you take money out of the business, it's called drawings. Done, everyone? Chaliye. Now, when we talk about business entity concept, kindly note this down. When I put money into the business, it's called capital. When I take money out of the business, it's called drawings. That means Niharika and her business, they are not the same thing. They are two different things. Because if business is answerable to me, I am also answerable to business. Where's the money? Where am I putting it? ठीक है ना? That is business entity concept. There's a theoretical portion to it as well, which is explained here. Business and the person are two different people, and then business is treated as artificial. Any money which is withdrawn by the proprietor, it is called drawings. Profit belongs to the businessman, not the business. Whatever money I invest in the business, profit is a liability, while loss is an asset. Then the financial performance of an entity is ascertained by recording the business revenues and expenses. The financial performances can be seen that we record the business revenues and expenses. Okay? And then is useful at the time of liquidation for determining the payouts to various stakeholders. What we do is when the business is dying, anybody who invested in the money in the business, he would stand and say, if the business is dying, give me my money back. This is possible only when you treat the business and the businessman separately. They shouldn't be the same. Right? Got the point? Acha. Is it clearly visible now? Done, everyone? Vishal sir, because I gave money to the business and business has to perform and give me my money back. If business won't perform, I can give this money to someone else as well now. योगेश सर, लाइबिलिटी यानी बोझ, मुझे किसी को पैसा देना है, प्रॉफिट मेरा थोड़ी है. अगर मैं बिजनेस हूं तो मुझे तो बिजनेसमैन ने पैसा दिया, मुझे उससे वापस करना है. Always remember, if the business and the businessman are different, if I as a business, okay, I'm a business, and the person is named as Niharika. She invested 10,000 rupees in the business. Why would she put 10,000 if she's going to lose it? She can give the same money to a bank and earn up to 7% interest right now. So business has to perform. If it won't perform, then what will I do? I'll give this money directly to the bank and say, I'll earn from there only. Na? Yes, Rajiv sir, that is concept. All these things are correct because ultimately na, the business concepts, whatever accounting area that you are learning is, this is all a part of that only. Viji sir, whatever I said in Hindi, I repeated the same in English as well. So there's nothing that you missed. Done, everyone? These are very minute points. They'll put this into an MCQ and everybody gets baffled that, the question is coming from somewhere else. What they are doing is just playing with the words. What you need to be is very clear with the concept. If you know the concept, whatever question they make, you'll never be scared. Acha, next concept is realization concept. Realization concept says, acha, if I say that record 10,000 rupees right now, you'll say, ma'am, where's the bill? I said, I'll receive the bill now. The person is standing there, he'll just buy and then I'll give it to my business. Can we do that? है ना? So realization concept clearly says that record the things when it actually happens. When you actually receive the money, only then record it. Otherwise, don't record it. Got the point, everyone? This is the realization concept. This says that when the revenue is actually realized, only then you believe that you have earned it. No future income is considered. I can say, "Arey, kal ko paisa aega, I'll receive money tomorrow." No, I'll receive money day after tomorrow. No. We're not going to record like that. We'll record only when there's a certainty that yes, there's the bill, I'm buying it. Then goods sold on approval will not be included. If I gave something to you and I said that, sir, if you won't like it now, give it back to me after a certain period of time. Within 15 days, if you'll return, then there is nothing of that sort. That is goods sold on approval. Till the time the approval period is not over, it is not considered that it is sold. The rules of the revenue recognition in terms of earnings should be either complete or near completion. It should be certain. You must have received the advance. Then you can record the things. If you haven't even received the advance, then you cannot. Got the point? Is the realization concept absolutely clear? Chalo. Then let's move on. The next concept, we are done with one more concept. Uh, then is the dual aspect concept. I'm coming on to the dual aspect concept first. Dual aspect concept says that, see, if I say that pata hai, I bought this equipment that I'm using for my classes for 1 lakh rupees. What will you say? Then, ma'am, how did you arrange 1 lakh rupees? I said 80,000 was my own. Rest was a personal loan that I took from bank. So in this case, I would say that if I build something, if I if I have got an asset in the business now, it is basically a cluster of liabilities plus capital. Okay? This is dual aspect concept. That whatever you do, it has both the points there. Uh, there it is. The dual aspect concept. It says it follows the double entry system of bookkeeping given by Luca Bartolomeo Piccioli, and this is called capital plus outside liabilities, the money that I ask other people to give me, and then that is how we build up assets. But the point? There they are following every receiver is also a giver, and all every giver is also a receiver. The one who gives money is also receiving money. The one who receives money is also giving money. Done? So the details are written there only. Every receiver is also a giver, and every giver is also a receiver. So in this case, every business has two aspects. For example, if I bought a particular pack of chips, then I got a pack of chips, and what did I lose? If I want to get something, I lose something as well, na? ठीक है? Done, everyone? चलिए. Once we are done with the dual aspect principle, what's the next? The next point is historical records concept. They say that whatever we record in our business, it's all old, and it is actually old even. Whatever I do, if I say that I'll be preparing the books of accounts, we prepare it for the year which has already passed, not present. That means if I have to show you the books of accounts today now, I'll show you for the 1st April to 31st March 2023. Right? The bank's balance sheets ended on 2023 March. That means it is old. Yes, sir. It is assets is equal to liabilities plus capital. Historical records means that the area of accounting that we talk about, historical records means whatever the price was at that point of time, we record whatever was there in the past. And this is one of the limitations of accounting, that everything they record is a past, not present. Got the point, everyone? Historical records. Now everything becomes easier. These were the difficult parts. And there's, I think, one more that is a little difficult. Rest everything is easy. Any doubts till now? At the recording stage, one thing is very important. Acha, everyone, let me just talk about it. Today, we are dealing with something. Huh? I said that let's use method A. Tomorrow, I forgot that we were using method A. I showed it to you by using method B. Then someone said, "Ma'am, let's have a revision class." In that revision class, I gave you method C. What will happen with you? Will you be sufficed with that particular situation? Or you will say, "Ma'am, what is this? Just give us one particular method now. I got to know half of A. Then you gave us B. Then I got to know little part of B. Then you introduce C. Now can I compare these three classes at all? You won't be. In terms of methods, they will always say that use one particular method and continue with it. Do not change it. But consistency doesn't mean that we cannot change. Consistency says if you are on A, you switch to B. Then keep going with B now. Don't come back to A, go back to C. Don't do that. Got the point? This is convention of consistency. Convention. It's something that is there in this field. It's a kind of custom. Next pointer. In the business, when you begin, do you really think about ending it tomorrow? You just bought a 10 lakh worth rupees machinery for the business. Is it just for the day, or it's going to be there in the business for long period? What would you do? Going concern concept seriously just talks about one thing, that men may come and men may go. The business is here to stay. We will never invest in business if we are going to think that Array, it's going to end in one day or two now. We're never going to do that business. Going concern means that the business will continue for a long period. We assume that if I bought this machinery for 10 lakh, someday I'll change this machinery and then I'll buy a new one. But the business will still continue. That's an assumption. At reporting stage, if I tell you, if you ask me, how's your business going, and I'll say, I don't know by what time it would be over, you will not give money to me. The moment I tell you my business is going good, we have this much amount of plans, this is our project, you'll be giving money to me at any point. Going concern concept says always believe that the business is going to continue for a long period. That's what we call it as the going concern concept. I'll say that my business is will outlive the asset that they have bought. If they currently bought a premises, or you can say a building now, this building will not live for that particular time, the for the which the business is going to stay. Reliance would have bought so many things, and they those things have outlived the age of Dhirubhai Ambani even. You know, Dhirubhai Ambani passed away. But then after them, what happened? The assets are still there, the business is still running. That means that people can come and go, but the business is here to stay. Always believe that it is going to be a going concern. And when we talk about such going concerns, we talk about depreciation as well. Since we are going to use it for a long period of time, so depreciation will also be there. Done. Done, everyone? Thank you, sir. Michael, sir, done? Vishal, sir? Anil, sir? After going concern, next is matching concept. Matching concept is quite cool. Matching concept says, Acha, everyone, you asked me that, ma'am, how's your business going on? I said, Pata hai, last year I spent 1 lakh rupees on my business, which I'm getting right now. And then you said, how's your business going on? I said, Pata hai, next year I'll be spending this much amount of money to make my business go. So you said that, ma'am, I'm talking about present. Why are you talking about past and your future? Whatever money you're going to spend in past, whatever you spent in past, or whatever you're going to spend in future, that's not something I'm asking. I'm asking you about today. So matching concept clearly said, they said that, see, you record the expenses of this year, you record the incomes of this year, and find the profit of this year. ठीक है ना? Matching concept says match in terms of your profits or losses. That is for the year. Done? Now the next point comes accounting period concept. Okay, let me give you a few things there. I'm a Punjabi. In our family, Lodi is one of the most celebrated festivals. Correct, sir. When we talk about Lodi, na, it's celebrated on 13th of January every year. It's a harvesting period. Similarly, when we talk about different areas in Assam, they have Bihu. In there are other areas where people would start their business on a specific day of the year. For example, certain people will say, "Arey, we will start our business on Diwali. Diwali is an auspicious day for us." In terms of Gujarat, I think they start their year for the businesses in, I think, somewhere in June, July. In terms of people who are in West Bengal, they are someone who strongly believes in Ma Durga. So they say that, Arey, we should start our business at the time of Navratri. Na. That means everybody is going to think about starting their business on a different day. But can we compare our business then? If I said I'll start my business on 13th because as per my family it's the day. Maybe anybody else, Rajiv sir, you said that, nahi, let's start it on Diwali. Can I compare my business with your business? Unfortunately, our time tenure will not match. So obviously, we cannot compare. है ना? So accounting period concept was introduced. Accounting period concept says, in terms of the business, they say that for all the businesses in our country, the year starts on 1st of April and ends on 31st of March. That's the rule. The year starts on 1st of April and it ends on 31st of March. Clear everyone? Accounting period concept? Okay, next pointer. We were done with money measurement concept, which talked about express everything in terms of money. Going concern said that let's just continue our business and record the things on the cost of the assets and record depreciation, because the asset is going to live for a smaller time while the business will live for a longer period. That is why we record the things at their cost. We do not record at the market value, because we're not going to do this every now and then. Depreciation is based upon total number of years, whatever we have. If I got a particular asset for 10 lakh rupees now, and I'm using it for 10 years, what is the amount of depreciation that I should charge? What is the amount of depreciation that I should charge everyone? What would be the depreciation for every year? It is 10% or 1 lakh rupees for every year. This is depreciation. Next point, reserves and surplus. Reserves is basically the money that we are accumulating in the business and keeping it secure for us. That is called reserves. We are scared that someday we might have losses, so that's why we are going to keep some money today. So we're going to have reserves and provisions are created for any future liability. Then deferred revenue expenditure. I think this is something that we'll be talking about in future. I'm leaving it for today. And then it also helps the investors, and they can assume the life of the asset. If they can see that the business is going well, then it is easier for them to look forward to it now. है ना? Done everyone? चलिए, after the area of going concern, we're done with dual aspect. We were done with revenue recognition. That was realization concept. Revenue recognition should be done the day we see that we are earning it. We are sure about it. Then historical cost concept is also done. The price at which we buy it, we will record it that particular amount, not the market value. Acha, next is matching principle. Matching principle was about matching the cost against the revenues. That means incomes for this year minus expenses for this year. That means profit for this year. ठीक है ना? Done everyone? Matching principle clear? Acha. Then there is one particular principle of objectivity. Objectivity is about you ask me that, ma'am, I spent 10,000 rupees on petrol. I said, give me the bills. Once I saw the bills, I'm done with it. That is objectivity principle. This principle says that when we talk about unbiased or verifiable concepts in terms of that, whatever evidences you are having, please show it. It should be supported by invoices, receipts, cash memos, etc. Done? Any doubts in the area of objectivity principle, everyone? In that particular chart, whatever we did, we are done with almost all of these. We are done with accounting period concept. We are left with just the last three. And I'm also done with the area of principle of objectivity. Uh, the last three. First is convention of full disclosure. What do you mean by full disclosure? The business should provide detailed information of that particular business to everyone. Convention of full disclosure says that the financial statements and their accompanying footnotes should be completely disclosing the vital information, all the relevant information of the business. Everything has to be stated there. ठीक है ना? And then we have the convention of materiality. अच्छा, convention of full disclosure gave rise to materiality. What do you mean by materiality, everyone? Have you heard about the term materiality? What do you mean by the term materiality, everyone? Okay. Evidence is basically related to be able to value. Okay. What if I say material means something which is important? See, I asked you about your business. You gave me the full information. That is called convention of full disclosure. And then I said, nay, nay, I am just asking you about this project. Should you still continue with that point that, nay, nay, let me first tell you everything about my business. Then I'll come to your question. Materiality means whatever is important for the business. Okay? So it's basically an extension of full disclosure. Under full disclosure, you tell everything. And in materiality, what you do is you tell the most relevant portion for that particular project. Done? Any doubts in this area? Materiality is an extension of full disclosure principle. Done? Chale. Now, after materiality, what's next? Then is convention of conservatism. What do you mean by convention of conservatism, everyone? Conservatism is called prudence there. Prudence means be scared about the future. If there is a profit, wait, get it, and then we'll talk. In case there's a loss, separate the money right away. That is conservatism. That means you anticipate the losses but not profits. You should accept the part that there may be losses in future. So you keep the money aside. Na? This concept tries to ensure that all uncertainties and risk inherent in the business are adequately provided for. They create provisions for this. Done, everyone? Any doubts in terms of conservatism? Provisions means, sir, I'm keeping a little money aside because I anticipate that in future I might face a loss. It's a kind of saving for future uncertainties. Done? Then comes convention of consistency. What was consistency, everyone? There is no problem if I move from one particular method to another, but whatever I take, I will be looking forward to the one particular area. That is, I will look forward to the fact in such a way that in any case, whenever we are working on it, we will make sure that we, even if we change, we continue with that change. Got the point? Done? Acha. I was using in depreciation, there are many methods. In depreciation, I was using method A. Then I saw that the method B was better for income tax. So I said, let's just drop off the method A and continue with method B. Now, do you really think I am not consistent just because I changed once? Or you'll call me inconsistent if I said A, then I said B, then I said C, then I said D, then I said E. Right? This is inconsistent. The first case is still consistent. And let's talk about the area of conventions of inconsistency. Consistency, the types there. First is vertical consistency. What do you mean by vertical consistency, everyone? Vertical means within the organization. Throughout the organization, same method are used. In the same organization, same methods. Horizontal means over the period of time. Today is year 1, next is year 2, next is year 3, next is year 4. In all these years, I have got horizontal consistency. Then comes dimensional consistency. Your organization and my organization should have similarity so that we can compare. Na? If you are an ICSE student and I'm a CBSE student, Can we compare our scores? We just can't. Got the point? That is dimensional consistency. Okay, so shall we continue further and deal with the MCQs and other things today itself, or shall we call it a day? Now that would be your call. Please confirm, everyone. Is there any doubt in whatever we did till now? Today? Continue with the MCQ portions? Chaliye, I think let's talk about a few MCQs as well. In the future, we'll be coming about this part as well. Generally accepted accounting principles. That is called GAAP. These are something that is taken as something where all the world's businesses follow this. So what we do is what we are following is given by American Institute of Certified Public Accountants and Institute of Chartered Accountants of India. This is what both of them have given, and this is what we follow. Now we'll be coming back to that last slide in the next class. Till then, please go ahead and answer this question. Question number one: matching concept means assets is equal to capital plus liabilities. Transactions recorded at accrual basis anticipate no losses but recognize all losses. Expenses should be matched with revenue. What is it? Sonali ma'am, correct. Lakshmi ma'am, correct. Bibiana ma'am, correct. Very good, everyone. The correct answer is D. The matching concept says record the expenses for this year and incomes for the same accounting year. Next question. The business or economic entity concept is applicable to sole proprietorship, partnership, corporate form, or all of the above. The business or economic entity concept. The answer is all of the above. The business or economic concept is applicable to all kinds of business organizations, be it sole proprietorship, be it partnership, or even a company. Okay? Next, conservatism, materiality, consistency, or full disclosure. Convention states that to make financial statements more meaningful, only significant and important items should be supplied to the users. Only the most important things should be stated, everyone. Not everything, but the most important. Think about it. If I ask you that how's your examination going on, you start telling me about your bank, you start telling me what you're going to do after JIB, and then things really don't work as per what I was looking forward to. Okay, different answers. The correct answer is B, materiality. The question was literally saying it. Most important items, only significant items. Very good, Padma ma'am. Very good, Vishal sir. Acha nahi, you went wrong there. The correct answer was B. I think there is no B. Naresh sir, you were right. Ashwin sir, you were right. Karthi Vishak sir, you were right. Bala ma'am, you are correct. Very good. Let's move on to the next question now. Just ignore the numbering there. Accounting standards are statements prescribed by. We've just talked about it. That there are principles and standards. In our country, who gives it? The central government, ICAI, SEBI, or Institute of Cost Accountants of India? It is ICAI, Institute of Chartered Accountant of India. Next question. Which of the following is or are the main principles of double entry bookkeeping? Every business transaction has two aspects of the giving and the receiving portion. For every transaction, two parties must be interested. Twofold effect of business transaction is recorded, or all of the above. Double entry system. Correct answer is D. Very good, everyone. Just a few wrong answers. Most of you are correct. Very good. Next, what is the need to bring the standardization in accounting principles? Why do we bring standardization in the accounting principles, everyone? What is the need to bring standardization in accounting principles? There is a need to bring standardization in this particular area to bring consistency, to ensure transparency, to be comparable. All of these is correct. That's correct, everyone. Next, the going concern concept means that the going concern concept means that the business is going to continue for a long period of time. The correct answer is C. Okay, that's it for the day, everyone. I hope it really helped you. Is there any doubt, everyone? Please confirm.